In this video, we're going to talk about how you can use the larger time frames to help you trade on the smaller time frames. In fact, you can use the indicator to trade on any time frame that you wish. But there's a couple of important things that you should be aware of. The first thing we need to know is, what is the higher time frame saying to us about the market? Well, you can see here we have got colored candles. That's rule number one. We do, as of the day before yesterday, have a lower print in the histogram. We don't know what today's histogram will be, but at the moment yesterday's histogram was lower than the day before, so we've actually got the opportunity to look for short trades. So once we know that, we can begin with actually marking out our daily levels. Now, the liquidity indicator actually colors the part of the candle with the highest level of liquidity. So you can see here that we have a little red bar at the top of that candle and a little block of orange. So what I'm going to do is I'm going to mark those two levels with a block. Now we've got that area of liquidity marked, we can simply go down to the H4 chart. Now, because the bias is potentially down on the daily chart, we can see that once we're on the 4-hour chart, we can actually refine our levels slightly. So we've got this big purple candle, which is obviously a liquidity level, and we've also got the last liquidity level on the H4 as being the bottom of that little orange area. Now you can see that the market has come back and it's retested that level just here. So what I'm going to do is I'm going to switch down now to a lower time frame, and it could be that we will see a colored candle form on the lower time frame, but ideally before we enter into a trade we do want to see a colored candle in our direction. This is a bit like a game of Russian dolls. As you go down the time frames, you can actually refine your levels more and more. We can see that on the hourly chart, the highest liquidity is at this area. So what we could do is we can actually refine our area to that sort of level. Now you can see that we had liquidity pump into here and the market dropped. At the moment we don't have any colored candles, so I would be a little bit cautious about going short on this market, especially if I wanted to take an hourly trade. A very good rule of thumb to remember is, if you are trading on a time frame and you're trading a liquidity move, so you're going from, say, this level of liquidity up here, let's say that we get some colored candles and the histogram actually prints, then we want to trade back down to the liquidity level on the same time frame, which would be back down to here or back down to here. What you don't want to do is you don't want to hold a trade which you maybe took on a 5-minute chart, expecting it to run down to a liquidity level on an hourly or a daily chart, unless that time frame that you're actually trading in is actually matching up with a liquidity level as this one does on the daily. So yes, we could hold this for a daily trade because we are in a daily area of liquidity. So this has to just play out for us, and literally there's nothing to do at the moment. Of course you might decide you wish to scalp, in which case you could go down to an even lower time frame, and that's what I'm going to do now. So to find the liquidity candles, or the colored bars, I had to drop down to the 15-minute chart, and you can see straight away that we've got this area up at the top, which is liquidity. And what I'm going to do is just mark the top of that area of liquidity and the wick, just like that. So you can see we haven't quite pulled into that area just yet. And where would you target? Well, you target the lower level of liquidity, which is down there, i.e. from one area of liquidity on this time frame, which is the 15-minute, you would target the next area of liquidity on this time frame. So if we did get a signal up here, we would target this level of liquidity down here, which is about 286 points, but we don't yet have a colored candle in this area. And this is what we're talking about when we talk about the second bite of a cherry. This area was liquidity and then it moved away, so this is in effect the second bite of the liquidity cherry, and what we're looking for is a high liquidity move on the histogram and then a low liquidity move. And you can see that we're actually getting a colored candle forming just here. So we have to be patient and wait for the histogram to actually give us a good signal. So I'm just going to explain a little bit about why I put the block on this bar. This bar to the downside was the largest histogram value. So this is the largest level of liquidity on this chart. As I said, we want to go from one area of liquidity, which is up here, down to the next area of liquidity on the same time frame. You can see we're already getting a reaction on this bar now, and we're just waiting for this histogram. If this histogram forms below this one, then this is a short trade, provided you've got the right sort of stop. So we'll just see what sort of stop we'd be using. So we'd have to put the stop above the top of that wick, and at the moment that'd be a 59-point stop. I personally would not want to get into that trade because the stop's too big for me. I prefer to trade with a much smaller stop of about 20 pips. So we can even go down once this forms the histogram, and it actually then forms a lower level on the histogram. We can then go down to the lower time frames, such as the 5-minute or even the 1-minute chart, to try and get a smaller stop. Well, sadly I was out and I didn't have the time to catch this trade and see how we could have actually entered in on a smaller time frame. You can see there the histogram did give us a high reading at that point. Now what you can do is you can go down to the lower time frame and see if in this candle here we could have got an entry on the 5-minute chart. So this is very much a point in question about mating time frames together. You can see that we had the signal on the 15-minute chart and the previous chart, and now we're on the 5-minute time frame. You can see that on the 5-minute time frame we actually got a signal to go short because we've got a lower histogram here and we've got colored candles. Now as we've gone down, what's happened is that you've got the formation of colored candles, and you've also got a histogram printing here with a lower histogram there, which means that possibly we would have had to have closed our trade and we didn't hit the lower level just yet. So that's only would have come down to give us about 130 points, but as I said, I wasn't about to catch that. But ideally we'd be looking for about 228 points if we were trading this larger move. Now we've got this on a 5-minute chart, what we could do is we could simply take the last area of highest liquidity, which was this level up here. So I'm going to put in a rectangle. So last area of highest liquidity was here. I'm going to make it another color. Let's give that a nice pink color, easily seen. And so now what I would be looking for is a return to this level. Again, colored candles, again a lower histogram, and that would be my entry on the 5-minute chart. Sometimes the moves don't actually run. That's just the way the market goes sometimes. But if they do run, then you should go from one area of liquidity to the next area of liquidity. So what I've done here is go down to the 1-minute chart, and you can see that the liquidity is printed even on the 1-minute chart. And if you wanted to trade, say a 1-minute chart, which you can do with this indicator, you would look at the last areas of liquidity. So we've got a little liquidity at that top there, and you can see as we've come up into that level, we've printed one little solitary candle, and that is a liquidity candle. So now what we would do is we would check on the histogram as we are in that area with the colored candles, and on the next lower histogram, which is this one, we would have gone short this market with a stop just up there. So it's about a 14-point stop, and ideally you would aim for this liquidity zone down here, which is 71 points away. Let me put a nice little rectangle. Now just because you've got a liquidity area doesn't mean the market will always hit that liquidity area. Sometimes it will stop, form what I call internal liquidity, where it will start to generate its own liquidity and not go for external liquidity, which is the liquidity that you can see on the chart. So you've got to trade this with quite a flexible approach, and you've got to be able to, if you're scalping, you've got to be able to react fairly quickly. Even on a minute chart, this indicator is really powerful, and you'll be able to catch some really good trades. Even though this is a 1 minute chart on the S&P, you can see that if you got in there and even carried it down to there, there's a good 48 points in that move. Ideally, you would want this area of liquidity to be hit. You can see that as this market moved out of here, it tested that liquidity once before, and here we're sort of shying away. Now, what you would do as well is you would take the most recent area of liquidity, which is up there, you can see it, it's a colored candle, and you would literally draw your box across like that. So now if we go up into that level, we have the formation of a colored candle, and we have a lower print on the liquidity histogram. That would be a short trade. So just wait for that to. Now, you remember in the last video I talked about the level of liquidity and where a turn took place, and the importance of marking those areas of liquidity on the histogram, because when the market returns to a previous level of liquidity, it's likely to turn at that level, especially if you have a lower print on the histogram. So we have a couple of levels that we would wait for to see if they're hit. One is associated with this turn, another one is associated with this turn. So these are both two levels that I would expect the histogram to print as a high level, relatively speaking, in order to elect a short trade. You can see that we've nowhere near those two levels, so I wouldn't take a trade. So we're back at this top level here, which was a previous colored candle. Now you can see that the liquidity histogram hasn't even come up to this level or this level. So I'm not sure I would want to take that trade because the liquidity is too low. And remember what we said, liquidity often preempts a large turn. So I just sit on my hands on that move and not take the trade. So we didn't get a volatility histogram in the area where I was looking to take a short trade, and we can see we're now approaching the previous levels where the histogram had actually turned with the market. So you can see if you look closely at the chart, we've got a set of colored candles, and we're right back in the zone of liquidity, highest level of liquidity for a while. And so this is now what you would look for a trade to go long. You know, you don't know where the market is going to head, whether it's a high or a low. But when you get this happening, area of liquidity, you can see that the histograms are now starting to print a slightly lower histogram. We've just touched a level pretty precisely. So that would be a long trade, and hopefully you might get a return to the upper level. Now the question is, do you really want to do long trades when in effect the daily is indicating that this market might be moving down? And I wouldn't go against the daily or the 4-hour trend, even if I'm trading on a smaller time frame. You can do it, but you've got to be careful because you might only get a couple of points out of the move before it just loses steam. Well, that's me finished for tonight, but you can see how you can combine the time frames and you can work down even to the minute chart to actually find very profitable trades. Well, good luck, and I hope you enjoyed this video. If you'd like more information about these indicators, get in contact with us on our email address, helpmetradenow@gmail.com. Thanks for watching, and I hope this video was informative for you.